Hey guys, it's October the 27th, and I am at LaGuardia on my way to the West Coast. What a crazy day in this markets. Oh my gosh, let's just take a look at it. We had quite the surprise yesterday. I should have stuck to my guns and just basically held that short on Meta. My goodness. Ouch, for lack of a better way to describe it. But let's go through the numbers on Meta today, and then I'm really just going to kind of leave it off there. Share my screen. Past performance, it's not indicative of future returns. We do have some economic data that is going to become relevant tomorrow on PCE, but we still have to get through Apple and Amazon tonight. So make sure that you're hedging. Strangely enough, when I look at these indices, they've been dancing around flat with the exception of NASDAQ, but even NASDAQ isn't down as much given these earnings, which have been largely speaking horrendous. Let's take a look at the map from FinViz. You can kind of see that all the big cap is down. And that really tells you that everything else has to be so strong for that to still result in this kind of market result from the S&P and NASDAQ. Now, I think what is probably going to happen after everybody settles down a bit off of this earnings season is a real thought process from any investment committee on whether you want to be as massively long technology as you have been in the last 5 years. Now, there's lots of arguments for reasons why you would do that. Namely, some of the capital expenditures will not go up. You can control inflation by just managing headcount. And there's a lot of other things there. But the fact is, these multiples are aggressive, and growth, what we learned from Meta, is going to come at the expense of earnings. And remember, if we were in the debt markets, that wouldn't matter, but we're in the equity markets, okay? What we care about is future earnings, future growth. Future earnings or future growth. Let's be really clear on that, because some companies don't grow but give you a nice dividend because they're so stable in the way they earn. Other companies grow, they give you no dividend, but they may buy back stock, something like a Berkshire Hathaway, which has been crushing it. As you know, we were very bullish at anywhere below 280, quite frankly, but we really went crazy aggressive on it under 270. And then obviously energy, oil and gas is continuing to not only have a growth because they're entering that portion of their cycle, but also very much so giving it back to shareholders to the tune of billions, oftentimes, either through stock buyback or through dividend payment. Now, again, please have a look at my video from yesterday where I started to talk about this. I will do a totally separate video, but if your debt is issued at a price that is extremely low, there is no reason to give that capital back to shareholders necessarily, given that we're going into a rising interest rate environment. Now, will it continue to rise, or will we have to start to taper to make sure that global growth maintains into the winter, which will be very tough for Europe? Hard to say. Last thing I'm going to say before I go into Meta's earnings is that Credit Suisse coughed it up. And the fact that it's down a little bit is kind of surprising to me. I'll do a little bit more work on it tonight and try to present it to you either today or tomorrow or Monday. But Credit Suisse is one you have to watch, because that's where we're trying to make sure that the Europeans can make it through on their banking system, as well as through the winter strange craziness that's going to happen as relates to their natural resource issues, let alone food issues. So that's how the lay of the land looks to start off. Now let's go into Facebook and see what happened. It's so fascinating, but this was a bad quarter. There's really no other way to say it. Now, we had talked yesterday that we were concerned on the top line down 4%, and that even though the street was probably going to penalize the living daylights out of them, it probably did make sense for them to go ahead and spend to grow. And that is exactly what Mark did, essentially. Mr. Zuckerberg, I shouldn't call him so casually. I wish I knew him as a person, but R&D up 45%, a little bit easier to see on this version of the income statement. They did mention that they will not be further increasing headcount. If anything, might contract it slightly in the year to come, so to speak. So that is the third now big tech, gap tech. Pretty much all of them are not going to expand headcount the same way they did this last year. that's kind of something to take note of. We are not necessarily seeing that in other parts. Caterpillar, when they came out today, very clearly said they're not getting rid of anyone because next year still looks really good. That said, there's other things with Caterpillar that don't make me want to continue to pick it up here as it's rallying so aggressively. But as you can see, this was bad. The numbers really come out to down 50% on earnings, and he still has to spend his way out of it. Now, the other thing, this I'm actually okay with. This I have mixed feelings about. They issued long-term debt. In theory, it's for some capital expenditures that just match back to it. In practice, this really is suggesting to me that the CFO knows that they have to shore up for a bit until they can prove out what the new strategy is. They spent a lot of time on the call fielding questions related to it, but not having an actual answer. I mean, that is the way that I took away. They were asked that question every which way, but Friday, is that how it goes? Every which way. They were asked it a number of different ways. They were asked, hey, can you tell us more about this metaverse thing and how you think it's actually going to play out, et cetera? The answer that he gave was a big fat, I'm not 100% sure right at this minute. You know, they were asked about the peripherals business that they have with that type of stuff. Not a great answer on that I heard from my perspective. They were talking about the fact that they're going more towards the pro business versus the everyday use business, but I'm not convinced that's a great answer and that the street is going to be all over that, you know, and then they were asked about just a number of different things that they were doing to grow the business. You know, they spent a lot of money on just the ad AI stuff. Is it still a core component? Isn't it like where's it going to produce return on investment? Very, very tough. But I think the other thing that we highlighted yesterday, but I really want to reiterate, is that although in private equity world, you can have this vision approximately still to be formulated and then create a technology. In big cap world, you got to produce revenue and earnings. And it's not clear to me that he's going to have a solid vision of exactly how that gets done for investors. He might have it internally, I don't know. But for investors, he doesn't have it. And it's not clear to me that he's going to get it by the first quarter either. So I will not be touching Meta unless it rallies too aggressively back to where it was, or if it gets significantly cheaper from here. I think here settling in, I did participate, I'm not going to lie, on the dead cat bounce a little bit. You can't keep a girl out of it. But then I absolutely now have no position in Meta either direction. I'm going to wait to see how it settles out, but I don't necessarily think you come in and pick it up today. And with that, I will stop sharing screen and we'll just take any questions. I should have just listened to you and just went ahead and like not lightened my shorts. But you know, whenever you're going to the airport the next day, you kind of want to like not do too stupid stuff if you know there's an event.
Yeah, of course. I mean, we've been bearish on Meta since, I don't know,
forever. I know, since forever.
You know, what's really interesting is the TikTok. I mean, TikTok is eating its lunch, right?
Okay, so it depends what you think exactly will be Facebook's future lunch. Do you know what I mean? I think they did talk a lot about the Reels business, and the Reels business is doing really well. Like, so average viewing time is up. It's just the ad revenue spend is down. And I think people sometimes, you know, digital revenue ad spend continued to grow in the last various dips that we've had, let's call it, with slower GDP growth at different times in the last decade, because it was such a new technology. Well, it's not a new technology anymore. So even, you know, it's just a smaller budget that's happening. There is this idea of experiential. So if you go to, and I probably should have shown this more clearly, but there are just so many earnings that come out. If you look at both IPG and our public group and Omicron, the two bigger ad companies within the space, PR companies, you'll see that the ad spend is actually down for digital. It's not down aggressively, but it's not growing the way that it used to grow by a lot. So what is growing and what people are spending on is this kind of experiential, like collaborative, more, you know, kind of more sticky, so to speak. So while I think that In Google's world, you're very close to having it because of the nature of what precisely YouTube is. In Facebook's world, it's harder to say that they have it. But my suspicion as well, so like, for example, with a TikTok, because it's so interactive with some of those weird dance moves and stuff like that, you could technically potentially say they have it. In Reels, not so much. So he did try to speak to that a little bit, but I'm not sure, and even then, I think there's waning interest in that kind of thing.
Maybe he could hire people from TikTok. I mean, apparently their algorithm is outstanding.
Yeah, I mean, the data algorithm is so TikTok wraps into all the other stuff that the parent company owns, and that parent company is a Chinese company. Let's just call it what it is.
No.
It's not so much that their algorithm is outstanding, that their data is a little bit different than ours. Now, the US data doesn't follow some of the same stuff because we do have GDPR and things like that in theory, okay? But one of the things that's always put us at a strategic disadvantage to China and Chinese companies is the quality of their data versus ours. And ours will always be worse than China's because we have this thing called data privacy and they don't. That's what it comes down to. It's actually as simple as that. Because there are the same data privacy laws in China, they can do things like fully integrate every single aspect of your life through an app. That's what WeChat does. That's what all these different apps are doing. We can't do it quite the same way. So it's a little bit of a different animal.
Right,
and
but
what they can make profitable versus what
politically, TikTok is not good in the US. I mean, for that very reason.
yeah, it's too bad the kids don't understand it, but yeah.
Well, right, I understand that, but it's a very, yeah.
Yeah,
So the Apple privacy thing hurts Meta, but again,
it
if
does.
TikTok is right, so if TikTok is maybe cut back a little in the US, I don't know. That might help Meta. Another thing is a lot of his employees are paid in stocks, so I don't know. It hurts it. Least case, it hurts morale. He has to do something. I'm thinking.
What do you think he'll do? How are you thinking about it?
I don't know. Hire TikTok. I don't know. I mean, he's lost a hundred billion of his own money.
No, I know. I think he's got it. Okay, so the pieces that are probably promising, but they're very speculative in private equity, is what's going to happen. Like truly, the metaverse is a big bet for him. It's probably the right bet, but whether he'll end up with a piece of it that's adequately commercial to justify this market cap in 3 to 5 years, that still remains to be seen. And he certainly didn't talk about it in enough of a meaningful way to make everybody thrilled about it. Do I think that's what he's doing though? Yeah, because the AI component still is for the purpose of metaverse, let's call it metaverse related activity, Web3 related activity, because they're really a little bit different. Yeah. I think that ultimately our antitrust, as much as it protects us, will hurt these companies, at least a company like Facebook. It might not hurt Google in quite the same way, even though people are very vicious toward Google. It probably won't hurt Apple. And it probably won't hurt Microsoft in quite the same way, since Microsoft really is more about the business side of things. We're in a really awkward time for these guys. They really do need a new technology to come out that everybody wants to buy to get rid of the old technology.
Yeah, I mean, it's a complete disaster. I mean,
Yeah.
It's almost unbelievable.
Yeah, you mean this earnings season, or how are you thinking about it?
What he's done to his company, I mean, and to himself. I mean, it's
Oh, you
almost
mean the amount of capital loss?
right.
I know. Yeah. I mean,
So
in fairness to him, he has,
I'm being proactive. So
yeah.
to me, it's an opportunity down here somewhere.
I want to see somewhere, but I want to see, I just want to see one more quarter because he definitely doesn't have it yet. Do you know what I mean?
Oh, sure, long term, right? But I'm just saying.
Yeah, he's not gonna have it for the fourth
Stock
quarter
will be
either.
at- The stock will bottom before he does.
Oh, I don't know. Maybe. I mean, I could see it doing a massive dead cat bounce, but from a lower point than this. This at $100, that's probably the right valuation for someone who is starting to have declining revenue growth and needs to massively spend their way through it.
Yeah, I think at 85, it's a steal.
Yeah. Okay. So when we go, if it gets down to the 80s, yeah, we should talk again. But I probably here at the $100 level, I think it dances for a little bit and just continues to like bleed downwards, kind of like PayPal has in that regard.
Cool. Okay. Good, man.
Ah,
Okay.
all right. Amazon tonight, Apple
See you.
tonight.
See you
Good
on
luck.
Wednesday.
Take care.